Well, good morning again. There are three consulting amigos today. We're missing Ray, but we've got John Mills and Ed Lasak, and so between the three of us, we have a lot of years of small business experience. Maybe not 100 years, but maybe 80 or 75 years, somewhere in that range. So we hope that we have some comments today for some of you who are in business or thinking about getting into business and some realistic comments today about what's really going on in small business in terms of profitability, sales, et cetera. So we're going to go jump right into this, and I'm going to bring this up in terms of a shared screen, and I hope you can all see that okay. Um, Basically, what we have here is some information. The economist from um, NFIB contributed this article to Forbes. It was published in Forbes magazine. Very interesting because this particular chart kind of says it all, and we'll spend some time with this one. Basically, it's every quarter from 1974, 1975, whether or not the revenue went up or went down, and by what percentage. And so if you take a look at this, you can kind of see that, and I will try to draw a line here. This is the 0 point in this orange one, just to give you an idea, because the dotted line happens to be the latest quarter's reporting and not particularly germane to the period overall is what 60 years, 55 years. So basically what it's showing then is the changes. So what this means is that in 1974, I think that's the second quarter, something like that, you can see that the quarter dropped from about 4% the quarter before, and it dropped down to a negative 2%, and then it dropped again and down to a negative, say 9.5%, and then it popped back up. So you're going to have variability, you're up a quarter, down a quarter, that kind of thing. But the interesting thing that we've been noting here is that we had a lot of good years in the 70s. We had a lot of good years in the 80s. We had the dot-com bubble in the 90s. And no, that's not correct. That's a recession in 91, 92. And that fell down for a few years. But once it recovered, we had a pretty good year here where you're averaging an increase of, say, 5 to 10% most years. Pretty nice. By the end of the decade, or say 8 years, you're up 40%. So pretty nice decade. Then we run into the dot-com crash, and I'm not sure. We could talk a little bit about why that happened, but a lot of people think it was mostly stock market issues. But we had several years that weren't very good there in that recession of '01, and then we popped back up, had some more good years. Then we hover around zero here for a while. And part of that, probably this right here, 2 or 3 or 4%, had to do with what was going on with the real estate mortgage crisis, which caused the Great Recession. And of course, in 2008, things began to fall, and you can see how bad they fell. We're talking about 8 quarters, 2 full years of dropping revenue for small businesses. This is really, really hard. I remember that, of course, very, very well because I was helping a variety of clients trying to get through that. I had a couple that didn't make it at all. Fortunately, had a couple where we made adjustments. This has to do with revenue. And so, because I mostly worked on the marketing side, we made adjustments to get their revenue back up, and we're pretty successful in doing that against some pretty tough wins. And by 2008 or 9, we were done with the fall, and we're beginning to come back up along with everybody else. But I can tell you this for sure: we didn't have many clients that dropped 30% in business, maybe 5 or 10%. but that had to do with how we responded because we started responding way up here. Most small business people didn't anticipate it and don't anticipate these kinds of things, and therefore they end up down in a hole and they've wasted their excess cash, and there's not much they can do about it. So we had lots and lots of business failures. But here's the part that I want to talk about a little bit, and that is that since that time, we had a period in here of 6 years where we were running at, whoops, excuse me, we were running at a negative 5% per year, per quarter. So that means that sales are actually dropping quarter after quarter. They didn't pop up above zero until we got to 2017, dropped a little bit, and finally sustained it really until we had COVID. And of course, this is COVID here, and it popped back up. But this is what's worrisome, and that is that we've had several quarters now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 quarters under zero. And it looks as though, and if you take a look at this time period, that's twice as long as this time period, and about as long as this one, except that at least there were 3 quarters that were up. This has been a very, very tough 3 quarters, or no, 13 quarters, very tough. It's kind of revealing. And so what I wanted to do is take a couple of you experienced guys and talk about the kinds of ramifications. What does this mean for business? What are some of the things that you do to try to get your revenue back up? What are some of the other things that you can do to try and get your profit up, maybe even in declining sales? So we've got 2 real experienced people, and of course, Ed is a CPA. So he pays attention to these numbers in a big way. Not that John doesn't, because he's a very numbers-oriented guy too. So, gentlemen, comments about this very
Could I make a
distressing
general
trend?
comment first before Ed goes into some specifics about the 2000 shift, the late 90s build up, and then the 2000 shift. Um, and there's that period of time that we kind of were relatively stable, didn't go hugely negative, but it was wallowing from 1999 to about 2003. Coincidentally, I would hypothesize that this was in the shift from an analog electronics basis of understanding how telecom and information worked to a digital understanding of how it worked. And I just pulled up Google revenue to look at that from 2000 on. And it may be surprising, but in 2000, Google's revenue was 0.41 billion. Point. It was almost non-existent.
Yeah,
And now we're talking about 300 or so billion now in the process of 20 odd years.
yeah,
So
wow,
basically, Google didn't exist prior to 2000.
that's correct.
Now, the next one you look at is Apple's stock and Apple's revenue, and you'll find remarkably that it tracks the same curve.
Hmm.
And so what my hypothesis is here is that downtime, and Ed, maybe you can lean in on this, of the late 1999s to the 2003s, philosophically was from the industry coming to terms with the fact that it was shifting to a digital revenue economy. And we didn't know that that meant chipsets. We didn't know that meant power supplies. We didn't know that meant battery backup systems. We didn't know that meant data systems. Now, this is the forerunner from what we're sitting at right now, which is the AI revolution, which is the next layer deeper on top of the digital revolution. So I'm gonna overlay my thought here and say to you, I suspect that what we're going through now with a quandary of really where we are up to date. Yeah, we've got tariffs going on, trying to figure out who's got what. We've got special rare earth metals. We've got, oil embargo. We've got all kinds of things going on but at the core of this is also some digital electronics um, assets that various foreign entities now, as a government, want control of. We're not talking, I want control of a Qualcomm or a Huawei or something. No, now that these governments want actually to get their hands on them and they want to invest. So the game has changed. And I think we are struggling with where do we go with the next level of this quantum AI mechanic stuff. So that's
Well,
my
I would take some exception to that because remember
good.
we're talking about small businesses here. And in 19, let's see, we started our business in marketing, and it became a digital marketing firm almost immediately in 98. And in 98, we built two websites. In 99, we built 20 websites. In 2000, 40 websites. And
Right.
so,
But
so
but
you're
are you in that business now, Ron?
well, no,
No.
you make I mean, what you said is not wrong, but what I am suggesting is that the adoption did not happen with these accounts, these kinds of businesses until 2010, 11, 12, 13, 14. Now, maybe you're arguing that as they learned to use a computer, that their business got better, but it didn't get better. It was bad the whole decade until 2019. It didn't get better at all. So was it the digital phenomena you're talking about did happen, it did exist, it happened in for major companies. There were a lot of little companies that took advantage of it. My company was one of them that took advantage of it in a small way, the internet side of it, not necessarily computers, of course they kind of go together now. But there's the big companies have completely dominated in terms of these growing sales, and smaller companies have not realized the kinds of gains that you would hope. Um, Even though internationally we were seeing productivity gains across the board, big and small companies, and that I'm suggesting that didn't happen until we got to the end of the decade, until you know
And
17.
I'm not going to disagree with you. I'm not going to say you're wrong on that. But what I am going to say is I believe personally that successful small companies have to have a combination of things: people, market, technology, and capital, right? And the technology aspect of a small business, a lot of people for decades went along with very limited technology.
Mhm.
They didn't need technology, and some people didn't even adopt a change in technology until their competitors adopted a change in technology. And then they had to go and change just in order to keep up. Now, in the last 20 odd years, the technology of information science has drastically changed every 2 or 3, 4 years. And if you're in an industry that uses technology and information and you don't keep track with what's going on, you are going to be sidelined unless you have an exceptionally unique offering. And back to the crack in the market concept of if you've got a really solid crack in the market and you've niched yourself in, it's going to be more difficult for a wandering technology to move you out of it.
Mhm.
However, that being said, at some point you've got to change from a IBM Selectric typewriter to a word generated AI system. I mean, they're all part of the shift. So I think small business does exist on the tail of big business. Yeah, big business is there and they're doing the stuff, but the
Yeah,
small business guys uses all of their services to operate.
yeah. It's just that the tail's getting a little long, and when
Mhm.
you lose revenue for that many years in a row, how many small businesses can stay in business? Ed.
I I'm totally shocked by this graph, especially when we've been looking at how well the stock market has done over the last several years. And then you look at the small business perspective, it's shocking.
It is shocking.
And it's completely different than what was in my mind before I actually looked at this chart. So there has to be something that's really significantly a negative impact of small businesses because they're not keeping up
Yeah.
with what the big businesses are doing.
Well,
Um,
I'm gonna, what I think the answer is simple. I don't know about the amount of protocol and red tape, and um, it's difficult to ensure our small business activity. It's difficult to deal with employee relationships and go through all the necessary. Now we've got ADA compliance things that are coming down all over the place. I mean, the cost of being in small business, our risks have grown. I wouldn't say exponentially, but our risks have doubled in the last decade, and our return has certainly not doubled.
Right.
yeah, I think you're right on that. The compliance issues are becoming tougher to deal with, costing small businesses more money. That's very important. Technology, if you're not keeping up, like you said, with technology, you're losing out. And those are two compelling reasons why this could be going down so drastically. It would show that, man, this is a very tough environment to be starting a new business.
Now,
So
I got
Yeah.
a question for you. On the 2008, 9, 10 slump, which we all witnessed here, I wonder if that happened as a result of our increased ability to do electronic transfers and sales and activity. Our banking system got heady with the idea that they could shift money around, they could shift liability around, and they could process tens of thousands of sales. And as long as they kept within their statistics of liability, everything was fine. And it was like a souffle. I mean, from what I remember, the sales were going up, money was going up. It was all good except for a lot of the investors weren't actually people living in their homes. They were investment for investors' sake. And at the end of the day,
Mhm.
the value just souffled out and all
Right.
the liability came down and the bank had to foreclose.
There
And they
were,
had,
yeah,
and there was a,
you're onto something, I think, there, John. And there are a couple of things that go along with that that are sort of parallel. They weren't necessarily digital directly, but they were similar. And that is that, and I know this for a fact, that is the bigger banks began to get rid of real estate appraisers about the same time. And they did so thinking that the computer world would be able to do evaluation just as well as sending somebody out and looking at a particular house, et cetera, et cetera. Now, there may be some truth to that, and I've followed it pretty closely. However, I do know that a lot of banks offloaded that to like title companies. And were they really qualified to do that kind of work? Did they possibly mess up the valuations a little bit that that reflected how much you could borrow, et cetera? And the answer is, yeah, I think that's probably true. It probably did happen to some degree. However, um, I think that the number one problem is that we had this national idea that ownership of property was going to help everybody because it's our major investment, et cetera. You can still make that argument, but they lowered the threshold so much for qualifying that you didn't have to be making enough money to pay for the mortgage in order to own a home. I know this again firsthand because I know several people that there's no way in the world that any one of us would participate in a mortgage with these people because,
Well, yeah, we
yeah,
had people who got on with zero finance money,
right.
even got deferred 10-year notes at a fixed rate, and at the end of 10 years, guess what happened?
Yeah.
It came due, and I've got a number of people who I knew of who bought in 2001 and 2002 on these phenomenal deals, and 10
Yes.
in 2010, guess what? They lost the house.
That's exactly right. And I happened that my mother was living with us at the time. We had a healthcare worker. We got to know her pretty well. You know how much a healthcare worker is making. It's 50 cents above minimum wage. And she was able to finance a second house that she did not rent, wasn't a business. It's just they said, "Oh, you qualify," and so she bought another house, and so she literally had two houses, and she didn't make. I imagine she didn't make more than one or two payments. It was impossible for her to make payments. This kind of thing happened a lot during that period of time. So that was the reason we fell apart. I mean, it was strictly a governmental overlay of new laws and an attitude that everybody should be able to buy a house. If they buy a house, they'll take care of it, et cetera, et cetera. Well, that did not work. And of course, once the banks began to fail, they began to pull notes from small business people and not renew lines of credit and those kinds of things. So it definitely impacted the economy as a whole. And that's why it was such a deep, well, Great Recession. It's a whole new name for it because it was so big and so bad. You can see it here in small business. So did big business make mistakes trying to anticipate, do better planning with computers? Yeah, probably they did. But I still don't see a correlation of small businesses utilizing technology until we get into 2012, 13, 14, 15. The market for websites didn't even get saturated until 2014 or 15. So,
I'd like to focus a little bit from COVID on. And one industry we have several clients in was plastic industry. And when COVID hit, their business went up significantly.
yeah,
And that was a big plus. I mean, we were saying to ourselves, wow, is this going to continue? It also shows the difficulty in forecasting numbers and revenue, which is the basic factor for determined valuation. But anyway, they had this wonderful uptick in the revenue, was significant. And you sit there and you say to yourself, well, this would be a great time to sell. But most people wanted to hang on. And then, unfortunately, when the competition got going and things stabilized, the revenue just went down, just like it shows on this chart.
right.
And with that, the future of selling that business just evaporated. So it depends upon when you sell a business, you want to sell it when things are good, right?
Yeah,
And get out. Unfortunately, most people can't pull the trigger. They're not ready. They think it's going to continue. So when you're at this high point in 2022, and because look at the increase that went up from the downward spike from -30 up to the positive of what, 7? That's a significant increase in a
yeah,
very short period of time. And we saw that in businesses. And
yeah,
then
that's
but
right.
then look at the drop right after that, and it's continued to drop ever since. So it
So
really shows you how hard it is to forecast. It is really difficult, especially for small businesses.
yeah, and it's not a straight numbers deal. It's really understanding the market and forecasting the change in the market's very difficult to do too. But it really this and you're right to focus on sort of these last years. I just kind of drew here in between, this little blue line. It's really remarkable because over zero, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13 times. And other than that, we're talking huge numbers. I mean, my goodness, I mean, in how many years do we have here? 15, at least 15 years, and only 14 months did we actually go above zero in 15 years.
It's
Well,
remarkable.
that's
It's
pretty bad.
shocking.
That's pretty bad.
It
So
is.
and so you're right, Ed. The question is, why are people opening small businesses? What are they doing? Are they fitting in the cracks? Are they not fitting in the cracks? Are they being successful once they start? We know from prior research and other shows that the number of new businesses is increasing. and has been for the last couple of years. So it's increasing, but the question is the market going to reward them? And it's
You
a very
better have a
tough
strong
question.
competitive advantage so you know that you have a good future.
You bet.
And
You
if you
better
don't
be,
have
really.
that, you're not number one or number two in your market.
That's right.
You may want to reconsider the future.
Yeah, I think you're
But
right about that.
these decreases are profound
They are.
recently, and it just shows you how difficult it is to run a business. And then you listen to the news and you watch the stock market channels, and everybody's doing so well for the most part. And then you look at these numbers, very sobering.
Yes, it is.
So I
Well,
think I'm encouraged in one sense, though, and that is that what made a successful entrepreneur in years gone by was the ability to think of opportunities that previously did not exist as easily as this individual could do. So they thought it through, they put in some due diligence and time, and then they created whatever it was that was outside of the box. That thinking hasn't changed. The tools have changed a little bit, and I think now there is obviously a need for people to think in a slightly different scope. They need to be able to use the tools of information services, and reporting in a little different way. But at the same time, we've got friends who are in the counseling, human services arena. Their tools haven't changed. They haven't been overcome by AI. When you talk with somebody with a grieving heart or a problem that's going on in their mind, body, or soul, you need hands-on. You need one-to-one. So there are some services that are still, very intimate, very personal. And then you've got other services that can be improved dramatically by supply chain logistics, by sensing when things move out of balance and go into balance. So there's a whole bunch of services that are going to be based on a myriad of sensors and a myriad of monitoring things. They're both going to exist. So I think entrepreneurial businesses are going to thrive. There's going to be more of them, and maybe there'll be percentage-wise fewer successful ones, but there will be successful ones.
oh yeah, I don't think there's any doubt about that. And I think this will be a good question for us to take up next time. And that is, well, who are these people? What businesses are starting, and how much money is being made from those businesses? Where are the markets for that? And how do you, if you're going to go into business, how do you select that? So those are some tough questions. Those are, I guess, the questions that we're really talking about. And how does that really happen? So
Well,
uh,
I guess one other point in closing here, and that is when revenue goes down, you hope your variable expenses go down accordingly.
mhm,
But unfortunately, we all know there's a lot of fixed costs in a business, and those don't go down. So
right.
profitability does suffer. And the only way out of it is to increase your revenue. If you can't increase your revenue, you have to look at consolidation,
Yeah,
where you can bring in several businesses, small businesses of a related type of service or goods, and be able to properly reduce your fixed costs by combining operations.
right.
So that's just another way of looking at it.
Well,
And I
so I'm going
know,
to jump on that and support you in this too. Yeah, in terms of physical material plant, in 2000, a building that an HVAC operator could operate could have been a $200,000 building. Today, that same building is going to be valued at $1.2 million. Just the property taxes, the insurance, and the mortgage on that for the same size operation has gone up 4 or 5 times. Um, and so, yeah, this is very real. The actual material costs have gone up significantly.
yeah,
I look at these shopping centers where a lot of these small businesses do business, and their rent just keeps going up, up,
yeah,
up, like John said.
yeah.
And it's really hard with revenue going down to be able to sustain a viable business in this
It's
environment.
really hard. Well, these are all topics I think that we will examine in more detail next time. They're all tough topics, but I think it's been a real eye opener, even for us who kind of watch this And I'm sure for those of you out there who are not aware of the trends, this is an eye opener too. So thank you,
So I've got
gentlemen,
one.
for a great program.
I got one final comment. Help me out where this comment came from. There's an old saying, and maybe an Indian saying: if you want to travel fast, travel alone. If you want to travel for a long time, travel with friends. And so I think we're coming into a time to be in small business by yourself is going to be difficult. It'll be fast up, fast down. If you really want to be in small business, you've got to have some consultants, some advisors, some ambassadors around you. And that is becoming more prevalent than it was before.
Yeah, absolutely.
Absolutely. That's a great way of summarizing this
Right.
conversation.
Well, gentlemen, thank you. An enlightening and interesting conversation, and we'll pick it up again next time. Thank you all for listening. See you.